Welcome traders. By the end of this video, you will not only be able to know where exactly you're supposed to enter in on a buy or a sell trade in the Forex market. So many people struggle and many traders have written me countless emails asking when they are supposed to enter into a buy or sell trade or when they are supposed to exit the trade. Now, this is a very big problem in the market that if you don't know when to buy and when to sell exactly in the Forex market, you may be caught up in the wrong direction of the market and end up in heavy drawdowns, costing you a lot in the market or leading you to blow countless accounts. In this video, I'm going to give you a straightforward way you can be able to enter in the market with the right timing and what you're supposed to wait for, what confluences you are to look for when you are taking these trades. So without wasting any more time, guys, let us go on to the chart here so that I can show you when you are supposed to buy and sell in the market. Now, that is very easy to say, but it's not very easy to follow or get done, right? In the market, when you hear someone saying, or a Forex guru on the internet or on YouTube here saying, this is where you buy or that is where you sell, that is very easy to say, but not easy to implement. In this video, I want to give you guys a very easy way that you can use to be able to time your entries correctly, enter in at the correct levels, and be able to maximize your profits as you go. So here we are on the AUD USD chart. But before we go any further, guys, if you're looking for a trustworthy regulated broker, be sure to use HFM. HFM is a regulated broker that has tight spreads and many account types to suit every kind of trader. Whether you are a low investment trader or a high investment trader, they have all account types to accommodate you. Check out HFM using the link that is in the description that is specialized for all of you, my clients. If you sign up using that link in the description, you will get a special desk that will be able to take care of you with any of your queries. So what happens to, let me just give you a short illustration here. What happens to many traders is they do not understand what this means. Let me just change this to a color that is very clear for us to be able to understand. Many traders don't understand this. They hear of it, but they don't understand the implications of what this really means in the market. So in the market, we know it very well that the market creates higher highs, higher lows, and at some point the market will start creating equal highs, equal lows, relatively equal highs, equal lows, and at some point the market will start to create lower lows and lower highs. These are the three stages of market movement that create what we call market structure. Many traders, as they trade, or traders that actually end up failing in trading, do not implement the very basic principle of understanding what market structure is and how this plays out in everyday trading. So just to clear this and then we start afresh, when you see the market move like this, many traders, when they see the market move like this, creating this high and then pushing above that high like this, okay, what many traders do is the moment this high is broken, many traders will start to know or start to get so comfortable or very sure that the market is going to continue up. And so what they do is they start entering a buy trade right here, and then they will put their stop loss, say, at this previous low, okay? And then they target, let's say, 1 to 2, like this, okay? So this is the traditional way most of the traders will trade or take their trades. So normally what happens in the market is that when this happens and you enter trade, this trade usually will come down like this, do something like this, spike to the downside, and then push higher, something like this. Not all the time, but most of the time this is what happens. This is why most of the traders get stopped out. Now, how do you get rid of this, or how do you prevent this from happening to you all the time? Now, in saying this, I don't want to put it out there that I don't get stopped out, or not professional or profitable trader ever gets stopped out. We all do get stopped out. That's why there is a stop loss in place in the market for us to protect our accounts from losing significantly large amounts of capital. So in light of that, you need to understand that when you are trading, you have to look at market structure. Understand market structure. When you understand market structure and how the market creates market structure, or how the candles print market structure based on human behavior, then you will know exactly when to enter. Now, how do you enter in on a buy here? Let me give you a short illustration here. Okay, so here we're having an uptrend creating this high, pulling back down, and then it pushes up and breaks that high right there. Okay, when it breaks that high here, how do you confirm that the market is going to continue higher after breaking this high here? Do you just assume that the market is going to continue going up, or what criteria do you use to determine that the market is going to continue pushing higher after breaking that high? That is what you're supposed to be thinking about as a trader, so that you can get the optimal trade entry level, okay? So that you get in at a very good entry level or at a discounted price. So how do you know this? How do you determine this? You determine this by studying the price action and market structure, how it is forming. So what happens is, when this high is broken here, market does not continue to go up in a straight line like a SpaceX rocket. It does not just keep climbing up into the sky like the SpaceX rocket. No, what it does is it moves in waves, in patterns. Okay, the price goes up, creates this high, and then it creates a breather. Okay, after this high, it creates this breather right here. Okay, after creating this breather, it gains momentum, and then it breathes in again, and then it has to breathe out, okay, to relax, and then it has to breathe in again, and then it has to breathe out again. Okay, the market is controlled by the emotions of living beings. We are not just trading against computers and robots. Yes, computers and robots contribute a percentage of trading in the market, but the market is controlled mostly by human emotions. These wave patterns represent a living market. The Forex market or stock market or any financial market is a living market because it is controlled by human emotions. Now, these wave patterns happen based on human emotions and human behavior. Now, a human being or any living being has what we call breath. The human being breathes in and out, in and out. So this wave pattern within the Forex market is exactly representing the living beings that are involved in the market. So the market also has to breathe in and out, in and out. It just doesn't go straight up like this, okay? So how do you use this to know exactly when to enter in for a buy or a sell? I want you to think about it like this. What is the principle of price within the market? Any market, even your local supermarket or any like where you go to buy fruits or domestic groceries, let's say groceries, right? What happens in that market? That market has what we call a buyer and the seller, the owners of the stock. For example, if you've gone to the market to buy, say, fresh fish, you'll find there a fishmonger or these guys who do sell fish, and then you are the buyer, they are the sellers, okay? So what happens is that whenever there is a high price in the market, you are not going to be willing to buy at a high price. You always want to buy at a low price. Even if you just think about yourself, you always want to buy things at a reduced price. Where there is a discount, there are many buyers. You should think about it that way. So why would you buy at the high price? The reason why you get stopped out when you buy at a high price is because you are one of the few people who are ignorant enough to accept to buy at a high price. Most of the people who are reasonable, who understand basic economics, want to buy at a low price. That is why the price of a commodity or a price of the Forex market, let's say AUD USD in this case, when it creates a high, it pulls back down, because at this high, buyers are very few who are willing to buy here. So there will be less demand up here for that commodity. So the price will come down, okay? When the price comes down, then now the buyers are saying, oh yeah, I can buy it at a lower price now. Then they will buy, to continue pushing that trend. So this is where you want to buy. Always look for buys at a pullback or at a higher low. Never look for buy trades at the highs. If you ever want to become a profitable trader, listen to me, guys. Never ever look for buys at the highs. Always look for buys in an uptrend, okay? Look for buys at the lows, okay? At the lows or the pullbacks. Don't look for buys at the highs. Look for them at the lows or at the pullbacks. That is in an uptrend. So how do you now enter in for a buy? Let me give you an explanation of this before we go onto the charts, guys. All right. But before we continue, guys, if you're watching this video and you're finding value on my channel, please take a second to subscribe to this channel, like this video, share it with your friends, guys, and also go join the free Telegram where I post out some swing trading signals on there. We have a good win rate there. So guys, to continue, when you're looking to buy, for example, this is what happens. The market is descending, creating lower lows and lower highs, okay? Market creating lower lows and lower highs. The market reaches somewhere and then it starts to create highs that are higher than the previous highs. Remember, these were descending highs, okay? Descending highs, creating lower highs, right? So you get a high that breaks the most previous high, this one here, like this, okay? That most people call this change of character. Most of the people call this break of market structure. Most of the people who trade ICT call this break of market structure. But I just call it, change of market trend or break of market structure. That can also work. So when we get that break of the previous high like this, okay, you don't jump in on a buy here because that is a high price, guys. It's a high price. It's higher than this previous high. Have that thinking in your head, all right? Don't buy at the high. When it breaks above this high, wait, sit on your hands, guys. Wait for the price to discount, come back down. You may not wait for it to come down to a demand. Just wait for it to discount a bit, okay? Get it at a cheaper price, okay? And then start to buy and hold your trade. Now, before we continue, how do we confirm that this is a new high? How do we confirm that this is a new high so that we can wait for a retracement down to buy? How do you confirm that this is a high? You only confirm that this is a high, okay? This one, when a low is created, okay? Keep that in mind. Never say that is a high, this one, when there is no low created after it. You only confirm that this is a higher higher than this previous high when there is a low that has been created that is higher than the previous low. Okay, keep that in mind, right? When you're trading this, keep it in mind, because this strategy is a trend trading strategy. You're trading based on the trends of the market changing from bearish to bullish or bullish to bearish. So in this case, you wait for the market to create a low. Once the market has created a low here, then you confirm that this was a high. Now here you're ready to continue with your buying, but never ever look for buys above that high. Okay, don't look for buys above this high. Your initial buys, don't look for them above this high. Look for them below this high, okay, and then look to enter in that continuation to the upside. So the reverse of this is true for the bearish market. Okay, when you are seeing, for example, let's just use this same example right here. The market is creating these highs, creating these lows like this, okay? And then it reaches some point and then it comes and takes out this previous low like this, okay? Now, how do you confirm that this has become a low? Okay, you confirm that this has become a low once a high is placed that is lower than this previous high. Okay, once a lower high is placed, then this low is confirmed as a low lower than this previous low, and then we can confirm that the market trend could be changing to continue lower. That is how you trade this kind of trading, and that is how you know exactly when to enter in on a buy or a sell in the market. Okay, so at this point you can now start to look for your buys, okay, around here, and your stop loss is not going to be at the previous low here. It's going to be at the low before this low, which is down here. Okay, and then you're going to target your 1 to 2, 1 to 3 risk reward ratios. Okay, like that. On the other hand, you are going to look for sells, okay, once this high has been created. So you're looking for sells as the market is now going away from this high here. And then your stop loss is not going to be at that high. It's going to be at the previous high, this one, the high before this one. And then you're going to target a 1 to 2. This is how you know exactly where to enter a buy and a sell in the market. Now, without wasting time, let's go on to the live chart and let me show you this. I won't show you this on just one time frame, but you can use multiple time frame confirmations for you to be able to take this trade, right? You can use multiple time frame confirmations. You don't just use one time frame. You can use multiple time frames. Okay, we'll look at this from this area right here. Okay, so we can see that the market was creating a trend to the downside. Okay, it was creating a trend to the downside, right? You can see that these are highs, lows, okay? Here it consolidated. Now, here after these highs have been created, okay? The market goes and breaks above these highs. You see these two highs? The market breaks those highs right there, okay? So let me zoom in here, and then we put here a level. Let's put here a box on this high, like right here, okay? You can see right there, okay? These are the highs that the market broke. There's also this high that the market broke above. You can use those two since they are close, okay? So let's remove this so that we can see those areas, right? Now, we can see that the market broke above those two highs right here. Now, this shows us that the market is now creating, or it's now creating an uptrend after this downtrend, right? After this downtrend, the market is now creating an uptrend. But how do we confirm that now this is going to be an uptrend? We confirm that that is going to be an uptrend when there is a pullback, okay? Pull back or pull down, whatever you want to call it, below those areas where the market broke the highs, okay? So this is the previous low, okay? And then the market has created this low. Once the market creates this low, we now confirm that this high, okay, is a true high that was higher than this previous high here, and also higher than that previous high there, okay? So this high is confirmed by this low. Once this low is created, okay, and then we get this confirmation, which is a morning star formation, or we see that this candle has become an engulfing above this one, we can go down to a lower time frame to enter our trades. But in this case, I just want to give you an example of how you'd enter this trade. Now, this trade here, we enter it here at this momentum candle. When you see this candle, this is a daily candle. When you go down to the 4-hour chart, you'll be able to see that this area here will be having multiple small pullbacks. But in this case, I don't want to make the video too long. Just want to show you within this area, you'd enter a buy trade right there, and your stop loss is going to be at this low, okay? At this low like this, right? And then you're going to target a 1 to 2. That is what you're going to do like this, okay? So this trade would give you a win. You don't enter up here, because if you enter up here like this, when there's that breakout, okay, when there's that breakout, you will get stopped out. Most of the time you get stopped out because the market will pull back down. Because you'd enter your trade down, you'd put your stop loss maybe below just the way I've put it there, okay? and you'd have a serious problem. Or even if you put it at this low like this, still you'd have a very huge drawdown here, which would cause you a lot of pain in the market, and you wouldn't even be able to achieve a 1 to 2 risk to reward at that point. Okay, so this is how you do enter your buy. You enter your buy at this momentum candle, you stop loss below previous low, and then you target your 1 to 2, because you're waiting for the pullback after the high. These previous highs have been broken. Wait for the market to discount to a lower price below those highs, then you jump in on a buy. Now let's look for an example for a selling market. Okay, look for an example for a selling market. Okay, so here we have a market that is rising, creating highs and lows. Okay, creating highs, creating lows like here. Okay, now this low here is broken by this move to the downside. Okay, creating this other low. Now how do you confirm that this market is continuing lower? Okay, how do you confirm that the market is going to continue lower? This low that has been created has to be confirmed by a high that is below this high, which is this one. Okay, so when this high happens and gives you like an engulfing candle or a candlestick formation, then you can jump in on a trade right there from that place going down. Okay, let me just draw a line where the market broke structure. So we have this previous low, and then this previous lower higher low, and then we have this higher low here, which is higher than this. Okay, so this higher low is the one we are looking for the market to break. Okay, when this low is broken, we are waiting for market to give us, okay, a low lower than this low, which is this one. Okay, but we want a high to be created to confirm that this is now a low, this one. Okay, yes, this is the previous low here that was broken by this one to give us a low. Now this high here is supposed to pull back in. Let me show you guys. This high right here, it's supposed to pull back in above this area here. It's supposed to give us a pullback like this before we sell. Okay, so in this scenario, we don't take a trade, we don't sell, because this high did not pull back up here. Now the reason why you should not sell here, okay, is because let's see you sell here, okay, and then you put your stop loss at previous high, which is this one here. Okay, like here, this is a very big stop loss, a very big stop loss. Okay, even if you would win this trade, but you do have to sit on this trade for very many days, like maybe 3-4 months of sitting in this trade. Okay, very few people do have this patience to take this trade, right? So this trade is a painful trade. You wouldn't take this trade. What you would do is you wait for the next structure to be created. Which would be the next structure? This is the high. Okay, this would be the high, right? And then this is the low, this one here, right? You see this? This is a low. Let me show you that. This is a low that was created, and then that's also a high right there. So when this low here now is broken, since we are now moving down, when this low is broken, okay, you wait for a confirmation that this is the new low. How do you confirm that? When there is a high which is above, okay, previous low. So when this high is placed, you wait for candlestick formations, okay, at that high which is above this level structure which was broken, that low. Okay, so here around here is where you're looking for your entries. How do you get your entries? You can use the daily candlestick formation here. Okay, you can use the daily one candle strategy here on a lower time frame to enter this trade and hold longer term, or you can just use these 1, 2, 3 bearish candles. Okay, you can enter here right? And your stop loss would be right there, okay? And then you can trade this and hold this long term. This wouldn't be very long like the other one. This would take you like a month and a half, okay, for you to get this trade. Now, that is how you enter a buy and a sell. Please take note that don't enter a buy when the market breaks out of structure. Wait for it to pull back. Don't enter a sell when the market breaks structure. Wait for it to discount above the level which was broken before you look for your entries. Don't enter a buy when there is a breakout in a bullish trend. Wait for it to pull back below the high that was broken and then look for your entries there. Your stop loss has to be at the most at the second level of structure. In a buy at the second low, in a sell at the second high. Guys, if this video has brought you value and you've watched up to this moment, thank you very much. But please don't leave the video without giving a like, subscribe, and share your thoughts down below.